If you're rich and you make too much money to contribute to a Roth IRA, then make sure you watch this video for a perfectly legal tax loophole called the Backdoor Roth IRA. What's up, guys? It is your favorite ex-investment banker, Jerome, back at it with another video. And today, we're going to be talking about the Backdoor Roth IRA for rich people. So if you're a little poor boy, go ahead and turn this video off and go make some more money or something. Actually, don't. Watch this video so then I can make some money and revenue and whatnot. Okay, now that we've taken care of that, let's recap what a Roth IRA is. A Roth IRA is a type of retirement account where you can contribute up to $7,000 a year, $8,000 if you're old, and you never have to pay taxes on the distribution. Sounds pretty incredible, right? Wrong. Because if you make more than $161,000 as a single person or $240,000 as a married couple, then the IRS won't let you contribute to a Roth IRA at all. So you have to pay taxes on everything all of the time. Or do you? One thing we know that rich people are really good at is finding the back door. Finding the loophole. Finding the perfectly legal but seems kind of sketchy but for whatever reason isn't sketchy and everyone seems to do it thing to do. Yeah, that works. And that's exactly what I'm here to tell you about, just as long as you smash that like button down below for the YouTube algorithm and subscribe to the channel. Okay, so high level, here's how a Roth IRA works.
Jerome, this is the IRS.
What the f***?
We've kidnapped your assistant, and we're not going to give him back if you reveal these secrets.
Please.
What's going on here?
Do you not listen? We've kidnapped him, and we're not giving him back if you reveal these secrets.
Go ahead. I don't even like that guy anyway.
No.
And click. As I was saying, the backdoor Roth is essentially when you transfer money from a traditional IRA into a Roth IRA, and it is perfectly legal. Here's how it works. As a rich person, you can contribute up to $7,000 per year to a traditional IRA after tax. Remember, with a traditional IRA, you only get any sort of tax deduction if you make less than $87,000 a year. Now, obviously, since you're in this backdoor Roth issue, that means you're making more than $161,000. 161 is greater than 87. You get my point. You have to pay all of your $7,000 after tax to a traditional IRA. Call it between $2,500 to $3,000, just depending on your tax bracket. What you can then do is you can roll over your funds from a traditional IRA into a Roth IRA. And technically, you can roll over any amount that you have in a traditional IRA, not just the $7,000 contribution limit, because technically it's not a contribution to the Roth, it is a transfer. To be clear, you can still only put $7,000 in the traditional for that year, but if you have more than $7,000 in your traditional already, you can transfer all of it. So, for example, say you've been contributing to a traditional IRA for like 10 years, you've contributed $70,000 of your own money, and say it's grown a little bit, so it's now worth $100,000. Yes, in a single year, you can transfer that full $100,000 amount into a Roth IRA, no problem. And you can do that as many times as you want. But, of course, there are tax implications to this rollover. But before we talk about those tax implications, I want to give a huge shout out to the sponsor for this video, And Collar. And Collar is a dress shirt and pant company for men, with all their products being sustainably made with the equivalent of 15 recycled plastic water bottles. The shirts are super comfortable with 4-way stretch, wrinkle and stain resistance, and of course they're machine washable. You can style them with a tie, some pants for a nice business casual look for the office, or take the tie off and wear it out for a casual Saturday. They've got loads of colors and style options on their website, and right now you can visit andcollar.com and use code Jerome for 15% off your order. That's andcollar.com and use code Jerome for 15% off. Thanks to Ann Collar, and now back to talking about IRAs. So, tax implications. At the time of transfer, you do have to pay taxes on any gains that your traditional IRA made. So, let's use the same example as before. You have an IRA, it's got $100,000 in it, $70,000 are your personal contributions, and then the remaining 30 are gains. You've already paid taxes on the $70,000 that's contributions, because remember, you paid taxes up front every single year that you contributed. The $70,000 was all after tax dollars. You do still owe taxes on the $30,000 gains. Let's assume it's all taxed at a long-term capital gains rate, likely 15%. That's going to be approximately $4,500 that you owe in taxes. Say you just pull that out of your rollover to pay those taxes right there, then the remaining $95,000 can go and be rolled over into a Roth IRA. Now going forward, you never again will owe any taxes on the money that is in that Roth. You get all of your distributions for free, and all you had to do was pay taxes on that $30,000, $4,500. That was it. Let's think of another example with a regular person versus a rich person. Let's say a regular person makes $9,000, they pay $2,000 in taxes, and then they contribute that remaining $7,000 into a Roth IRA in a single year, and then they never contribute to that Roth IRA ever again. Well, in 40 years, that $7,000 will have grown to $315,000, assuming a 10% return on the S&P, and all of that money is tax-free. Now let's think about a rich person. A rich person is going to be in a higher tax bracket, and so those last dollars, those last $7,000 that they need, they're going to pay more in taxes up front than a regular person. Kind of, I'm not going to go through tax brackets and how they work right now, but you get my point. Let's just assume that's true. That rich person is going to contribute $7,000 to a traditional IRA today and then never contribute ever again. In 1 year from today, that $7,000 is going to be worth $7,700, and they are going to initiate a rollover into a Roth IRA. Now, they don't owe any taxes on that initial $7,000, but they do owe taxes on the gain of $700. Long-term capital gains again, 15%, you owe $105. Let's take that $105 out of the rollover amount. So now you're starting your Roth IRA 1 year in with $7,600. If you let that money sit there for the remaining 39 years, so 40 years total, just like the regular person, you will have $312,000 remaining in your Roth. And it's all tax-free. Now, of course, it's barely not quite as high as a regular person, but you still have $312,000 and you're paying way less in taxes than if you had left your money in a traditional IRA. I mean, let's just do the math. If you left all your money in a traditional IRA, then you'd actually end up owing $92,000 in just federal taxes when you take all that money out. With the Backdoor Roth IRA method, you're saving all of that money. You're only really paying like $3,000 in taxes total. So, for all you rich people out there, make sure you're taking advantage of the Backdoor Roth IRA. Like I said, it is perfectly legal. People do it all of the time, and it is just a legal tax loophole. And then you're going to save a ton of money, and you can go buy your yacht, beach house, private jet, or whatever it is that you rich people spend your money on. If you enjoyed this video and you learned a little bit about a Backdoor Roth IRA or how to save some money, make sure to smash that like button down below and subscribe to the channel. Share this video with your friends. As always, I'm your favorite ex-investment banker, Jerome, and I'll catch you guys next time. Peace.
Wait.